Like that, we're live. So thank you so much, Tien, for joining us. You're obviously joining us on behalf of Pendle Finance. It's a project I've covered on the channel that a lot of folks are interested in. I'm going to give people just a few moments to trickle in before we start getting into the questions. But as the audience starts seeing this, if you have any questions from the audience, definitely submit them in the chat at any point. As we get more into the user submitted question section, I'll highlight some of the best questions that we can talk about there. But just right off the bat, Tian, would you mind introducing yourself, sharing us a bit about your background and how you started Pendle?
Yeah, sure. So for me personally, I've gotten into the crypto space in around 2015 to 2016 period. But my breakthrough as a professional in the crypto sector happened in 2017 when I joined Kyber as a founding team member. So learned a ton over there. And I led the business development unit at Kyber up until the end of 2018. So subsequently, after 2018, I've decided to leave Kyber, to gain a bit more exposure. And that was also when I started to get a group of people who are currently working with me on Pendle. And we started on multiple projects because we were just trying to figure out the kind of directions that we wanted to pursue. Now, the first project that we did as a team was to develop a mining software for users to mine privacy coins like Monero and Beam using FPGA. So that happened for a couple of months, and then after a while, we realized that the entire operation wasn't very sustainable because the coins that we were mining back then, they were just too volatile. This was all in 2019. Mm-hmm. So at the start of 2020, we pivoted to focus exclusively on software development, and that was when we got lucky and started getting contracts from Tezos, IoTeX, Band Protocol, Zilliqa, and then fast forward a couple of months, DeFi summer happened. We saw that people were getting yield exposure through all the different DeFi venues like Aave and Compound. Now, when people take part in all these different yield venues, they're guaranteed yield, but there was no way for them to lock in the rates. And we cross-referenced this aspect to the conventional money market. We realized that the fixed rate product plays a huge and important role in the legacy finance, and this was largely absent in DeFi altogether. So that became a motivation for us to start Pendle.
That's very interesting. One thing I've been wondering is obviously these fixed yield products where you can play with yield, sell it today, etc., are very popular right now. Obviously, we're seeing a few different competitors in this space. Why do you think it's all happening around the same time frame? Is it just the evolution of DeFi and this was a natural next step? Because as someone that was so into this space, until I spoke to you, I actually hadn't heard of anything like these type of fixed yield products that you were building. Just some background for the audience: Tian and I actually met through a mutual friend, Calvin, a few months before Pendle launched. So we were actually speaking before that. But yeah, I'm curious, why are these all coming out at the same time?
So I think this is, just from my personal observation, right? I think that it is certainly a natural progression from where we were. And if you look at it, right, the entire yield thing kind of just happened maybe around this time last year. So
right.
DeFi summer happened around July to September period last year, right? And it was really then we started to see people getting more involved in crypto through all these DeFi venues. And when all these DeFi venues happened, people were starting to get exposure. So I think initially, when people were getting the different types of yields, they were more interested in gaining as much as possible and not really thinking about managing yields. But as people become more conditioned about the exposure that they're getting through all these DeFi yields, then it's natural to think about how to manage them. So this is when I think the need and the demand for fixed rate products happens. So if you ask me, I think now is a good time because there is already an awareness, and rightfully we're seeing a few other projects working on fixed rate protocols, and I think in a matter of months we will probably see a few more products coming up live on mainnet.
Gotcha. So one of the big differences for users right now between Element and Pendle is obviously that the Pendle token has launched now. Can you walk me through your decision to actually launch the product with a token? It's interesting. I think a lot of projects we're seeing today kind of wait to release a token and airdrop it retroactively, but obviously you guys wanted to launch the token with the product. So can you just talk about that decision?
Sure. So I think, in our opinion, we thought having the token is actually an essential part of growing the ecosystem. And this is the case for us because we are aware that the product that we're developing is more complex than what we're generally used to at this point in time. So, just to take an example, right? How do people price yield? So if we were to consider this into, let's say, the mental model of a conventional user, it's actually not that straightforward. So because of the complexity of the product that we're introducing to the market, we think it's very important to obtain the liquidity, because like in the absence of the liquidity, it's very difficult for people to have a conducive trading environment. But in order for us to obtain the liquidity, with the awareness has to happen. So it becomes something like a cycle that we have to, in a way, try to penetrate. So we decided to
Right.
introduce the token because that token can potentially be used, and it is currently used to incentivize liquidity provision. And with the liquidity provision, we can then encourage trading of a certain scale. So that was the idea behind it. Now, we decided to introduce a token instead of doing something like a retroactive airdrop, is largely because we think that the community values having something in possession as compared to waiting for a potential airdrop. Because in the absence of a promise of tokens, right, there's always a doubt. But when the token is live and actively traded and accessible through different DeFi platforms, I think it makes a lot of difference psychologically.
Hmm. I'm curious, have you thought at all about how the token might affect where the market prices that yield component? One thing we saw at launch, obviously, was something we talked a lot about in our community Discord, was how the yield token or Pendle was implying the yield was much higher than it was based on the market rate. I think it was something like 18% for stable coins or something, and it was maybe the market rate was about 10%. So do you think the token incentive there changes the market pricing for the yield? Is that just a natural occurrence at the start that will maybe phase out? How do you view that?
So I'll be honest with you, when we started out the planning for the contract duration and the kind of assets that we wanted to support, I think we were making a lot of assumptions here. And when the markets were live, you were right to point out that there is a pretty big disparity between the actual yield and the implied yield. So I think the incentive certainly plays a part in this disparity between the implied yield and the actual yield. I believe that people right now have tendency to try to accumulate Pendle tokens, and I attribute the disparity to largely to the market inefficiency at this point in time, as well as the lack of awareness to the entire concept of yield trading. So generally speaking, right, I think because there is a belief that the Pendle token could be worth more. So there is that results in stronger demand in buying the yield token and then using the yield token to farm Pendle token. Because right now, this is probably the easiest way for people to accumulate Pendle token exposure. So this is one, right? And I think secondly, right now, looking at the entire APY or yield markets across the different money market protocols, it probably doesn't make a lot of sense for people to short the yield. So considering all the liquidity incentives, I think yeah, it generally makes more sense for people to kind of long the yield at this point in time. I think we are definitely still monitoring the different markets, because when we started out, we introduced AUSDC and CDI markets that expires at the end of 2022, which is about a year and a half away. And then over time, we realized that there's a big disparity between the actual yield and the implied yield. So we introduced a shorter duration. So the AUSDC and CDI new markets will expire 30th of December 2021, which is effectively about 6 months in tenure. Now, that said, there is still a pretty strong tendency for users to buy into the YT and then stake into the LP pool in order to get the Pendle token reward. So there is still a disparity there. But the point is, we are trying to experiment the different contract durations as well as the different types of assets in order for us to get more data points. And then over time, with more of these data points, right, we can iterate and refine our approach to introduce new markets.
Awesome. And I just want to, for anyone joining late, if you have a question you want to ask Tian or myself, definitely just post that in the chat. I will get to that, but I do have some more questions that I did want to ask. I'm curious, Tian, can you share what assets you're looking at adding to the Pendle platform and what's top of mind right there?
Yeah, so in terms of assets, we started with the stable coins like USDC and DAI. And we started with the lending and borrowing platforms like Aave and Compound. So when we, the way we think about approaching this different pillars of DeFi ecosystem, right? We started with Aave and Compound, but gradually we're looking to shift towards vaults and also AMM LP pools. So we want to be able to generalize the tokenization model to support assets across all these different pillars. Now, coming back to Aave and Compound, right? I think it is still premature for us to decide on the types of assets that we want to support from both Aave and Compound. We're certainly keeping a close eye on assets that are not stable coins, because they are there's generally greater volatility across assets that are not stable. And of course, I think for vaults and AMM LPs, we'll probably support the bigger pools. So as an example, we're currently looking at tokenizing the AMM LP for Sushi. So potentially looking at ETH USDC pool as a way for us to tokenize the yield and enable the speculation of the APY there.
So just to be clear, you're going to allow for speculation on the return of LP tokens on Sushi. So yeah, that's interesting. It sounds like there's a lot of factors to consider. That's really exciting, though. I hadn't heard that before. Have you thought of other asset types in general? I mean, could that be done with the Uniswap V3 liquidity position, or no, because it's an NFT?
Yeah, so I think the Uniswap NFT position will require modification, but generally speaking, like from the perspective of Pendle, we want to be able to generalize the yield across different types of platforms. So wouldn't rule out or dismiss Uniswap V3. It's just that in terms of priority, we want to focus on standards that are already pretty common across the entire DeFi ecosystem. So this was also one of the aspects that we shared with the AMA, with the Sushi community, probably a month or two back. We don't know, honestly, we don't know how the market's going to respond to it, because I think there's going to be a learning curve as with most other primitives. But then we're pretty interested to see how the market responds to it.
Interesting. So obviously, a lot of folks are priced out on ETH layer 1. Have you started looking yet at L2s or perhaps sidechains like Polygon, or is that just a little further along in the roadmap?
So I think we're definitely looking at L2 and all these different side chains as potential expansion in our roadmap. Now, I would say, right, Pendle as a second degree derivative will only make sense in a new ecosystem when there is an established set of infrastructure in place, and the TVL has to make sense. So as an example, right, I'll use Polygon as an example. So if you look at the DeFi blue chips, right, Aave, Curve, and Sushi, they're all on Polygon. So there is already a pretty established infrastructure in place. Now, in terms of the TVL, I think it also makes sense. Generally speaking, right, these are the two conditions that we'll consider when we are evaluating the possibility of deploying a Pendle onto these new ecosystems. Now, comparatively, let's say if there is a new ecosystem or a new chain that pops out, unless they are able to, unless the ecosystem has a established infrastructure and TVL, it wouldn't make so much sense for us. So I think Pendle is really taking a follower kind of approach when it comes to L2s.
Sure. So I'm curious, have you thought a little bit about differentiation strategies with your competitors? And like you mentioned, we anticipate a lot more fixed yield products to come out. Have you thought about different techniques to differentiate and accrue value to Pendle token holders aside from just thinking about creative new asset types? I mean, what else is there that you've been thinking about, if you can share?
Yeah, so in terms of the differentiation, right, I think there are probably several aspects. A large part of it has got to do with education, because even though if you look at it from a top level, most of these protocols can be labeled as fixed rate protocols, right? But if you go a little deeper, a layer deeper, you realize that at the implementation level, there's actually quite a lot of difference. I think, for example, right, just using Element as a comparison, Element has been positioning themselves as a protocol that allows users to buy the underlying at a discount. And truthfully, they are focusing a lot of their design and narrative around the principal component of a yield-bearing asset. Pendle does it very differently in the sense that Pendle focuses on the yield aspect of the yield-bearing asset. So in terms of the design, we are very, very different at the implementation level, at least. So I think it is up to us from a protocol standpoint to highlight and educate users about all these different differences, because I think over time, the direction will diverge. And as there is greater awareness from the community, then they will probably use each of these platforms for different purposes. Now, I wouldn't be able to point out the differences between Pendle and most other platforms that are up and coming because most of them are not on mainnet yet. So I'm not equipped with the best knowledge to comment on theirs. But I think the same kind of applications apply here. But I can share with you, in terms of the design principles, right? What are some of the things that helped us with our current design and some of the unique features that we also have as a result of the design principles. So I think for one, we've been very conscious about having Pendle AMM because we think the AMM model is essential when it comes to yield trading. Because yield tokens are fundamentally more, they're probably in the long tail asset basket there. So again, going back to the point of pricing yield tokens, right? It's actually very difficult if you don't have an idea. So if we were to utilize an order book system, that could be a very big spread, and it's not very conducive for traders to execute some of these trades, right? So we felt very strongly about pulling liquidity and then using AMM to facilitate the transfer of ownership and also for price discovery. And secondly, I think we wanted the Pendle platform to be able to generalize the tokenization of yield so that we can support not just the lending borrowing platforms, but also Volt and AMM and potentially the newer forms of primitives. And this has been something that we're pursuing. And every time we kind of work with new protocols, we want to reinforce that narrative. And then thirdly, we also feel very strongly about being synergistic with existing yield values like Aave and Compound. So instead of competing for liquidity from these platforms, we feel more strongly about being synergistic and offering additional optionality to the users of these platforms. This is why Pendle's sources of liquidity are the yield-bearing assets. Yeah, so with all this design principles in mind, we kind of constructed Pendle the way it is right now. And at the AMM level, we're also catering the AMM for assets that decay with time, because internally, we believe that as the DeFi ecosystem matures, we will likely see more types of financial derivatives emerge, and a lot of these financial derivatives will likely have time element. So, presently, AMMs like say Sushi or Curve, they don't really account for time, and time because of the time sensitive component, right? We feel very strongly about having an AMM to account for the time decay. So that's another aspect that I think could allow us to stand out over time.
Yeah, I actually want to expand more on your thoughts on pricing in time. One thing, when I was talking to Element Finance about the differences between Element and Pendle, one thing they were confident on was that the Element model would better discount the value of the assets for the cost of time. So I think their explanation was that if you add their principal and yield token on day one today, it would be equal to slightly less than the value of one full principal token. I'm not sure if I'm explaining that perfectly. Could you perhaps expand on that and the different approaches Element and Pendle are both taking to valuing time?
It is actually very difficult to explain, but I will say, right, in terms of the pricing of yield, we kind of just let the market dictate on the pricing of it. So the AMM itself is
Right.
the price discovery of the yield token is largely driven by the demand and supply forces in the market. And I think there, without going into the details of it, right, this is the price, the implied yield that we're seeing today is an outcome of the interaction between the buyers and the sellers.
Gotcha. Okay. So perhaps something to do more research on there is, on my end. So yeah, no, I'm curious. One thing I've been thinking a lot to switch gears a bit in DeFi is how do these products that are essentially trying to become like critical infrastructure. I think you would probably agree with me that Pendle and these fixed yield products are another tool set that can be a base layer for future DeFi developments, etc. How can you make sure that a product like Pendle's won't become commoditized? Um, what happens the day after liquidity incentives end, right? Could another project develop what you've been working on, fork that with a new incentive token or governance token? How do you ensure that you stay competitive, after the incentives run out?
So I think, certainly this is a question that we think about a lot, and I'd say like in terms of the approach that we're undertaking at the moment, we are focusing on developing an ecosystem of integrated platforms. So I'd say like there are probably two approaches here, right? One is from the product standpoint, we have to improve the usability and the user experience. And then secondly, we have to get all this, we have to get that interface or the backend, the smart contracts integrated with the other protocols that could utilize this for additional utility, right? So on the product front, when it comes to the simplification of user experience, right? I think one way for us to approach this is to abstract away the complexities involved, right? Because if you look at the current version of Pendle, it involves multiple steps across different platforms. So we can create a wrapper contract to consolidate these steps so that the user will only have to interact with the Pendle interface to achieve the same kind of outcome in locking in their rates. Now, once we have that, right, we can effectively integrate this as if it's a product to other wallet interfaces. So for example, eBank or IM Token, Zerion, Zephyr. So when we are sufficiently integrated with these platforms, then I think we become a lot less replaceable because there is natural reliance on the underlying protocol once we've achieved that. So I mean, going back to your question, right? I think if anything, we can certainly learn from say Uniswap or SushiSwap kind of experience, right? And I think Uniswap has a great relevance here because of the reliance of the protocol for underlying swaps. So yeah, we think about it the same way as well. And we think in order for us to become more embedded into the ecosystem, we have to create an ecosystem of integrated platforms.
Awesome. One thing that's been a hot topic, it seems like this week, has been potential regulations. I know there's been discussion in the US about stablecoin regulation. There's been some regulation discussion in Europe about private transactions. How are you thinking about regulations? Is it top of mind right now? Is it something that's a problem further out? And how are you ensuring that Pendle is fully decentralized and that no actor could take it down or stop the project?
So in terms of this aspect, right, we're suddenly thinking of community governance over time. So we've always had the intention of passing on the governance to the community further down. Now, as for the regulation, I mean, we've been consulting the other projects on how to approach it. So in terms of the company setup, I think we have a pretty standard template to follow. But I think beyond that, it's very difficult to say what kind of directions that we'll undertake because we are currently decentralized and we're also undertaking certain measures to safeguard ourselves from potential legal implications. And I think beyond that, we really have to observe how the landscape changes. At least for now, we're not targeting the American citizens, and we also have not been selling, or in our materials, we have not indicated any form of sales. So yeah, these are just some of the measures that we have undertaken to kind of safeguard ourselves.
Yeah. On a more specific note, I'm curious what, obviously you deal heavily with stablecoins. I'm curious what your thoughts are there about potential regulation. Do you think that if there was some regulation of centralized stablecoins, that there is an option out there, that decentralized stablecoin that would be effective enough to outlast that? On a similar note, obviously we don't want to upset our friends at Maker, but it seems like Maker is heading in the direction of centralizing their collateral with DAI is mostly backed by USDC now. So is that something you've thought of yet? Are there any options that you're considering that would be a fully decentralized stablecoin in your mind?
Not at the moment. I think this question is beyond my scope.
Have you, because I think what's interesting is like the most reliable one we've seen is Liquidity's LUSD, backed entirely by ETH. Just curious, if is that a direction you've thought of, and have you thought of using LUSD yet? I know the market cap's smaller, I think 1.5 billion maybe, but
Yeah, so in terms of the assets, right, we typically go with the platforms first and then the asset. So
interesting.
definitely not ruling out, but we because I think it's a lot easier to support a platform and then the assets that are listed on the platform. So generally speaking, I think, let's say one day we decide to support like Pendle supports a platform that has LUSD, then certainly we have the optionality to turn on the tab and support LUSDC.
Gotcha. Awesome. So on a similar note, could you share a bit about your long-term vision for Pendle? Do you think you'll follow the kind of accepted understanding of an exit to community model where maybe in 5 or 10 years, there's not really a Pendle core team, but the Pendle Treasury DAO would then dictate further developments? Have you thought a bit about what Pendle looks like in 5 and 10 years?
Mm. So we're certainly looking at community governance in the long term. But I think, from the product perspective, right, the way we think about Pendle is to generalize it, especially the AMM front, right, such that the other assets can also be supported on the Pendle AMM. And we think this is a good direction to work towards, considering the fact that the DeFi ecosystem will continue to mature, and then we will likely see more types of derivatives emerge that are also time sensitive. So we touched on this point briefly earlier, right? And this pretty much summarizes the way we think about Pendle moving forward. Of course, in order for us to get there, there are a lot of steps that we have to also undertake at the moment. The tokenization aspect has to take place. So generalizing the tokenization of yield of not just the lending borrowing platform, but the vaults as well as the AMM LPs. So these are the more immediate steps that we are working on. And then subsequently, when there are sufficiently when there are new derivatives in place, then we also probably have to work on an adapter to allow other forms of financial derivative protocols to integrate and utilize Pendle AMM for the trading of their assets more easily. So yeah, I think these are some of the loose ends that we'll still have to tie up. But I guess with time and as the market matures, we'll probably have more clarity on those fronts.
Sure. Speaking of the market maturing, one theory that I've just been thinking about a lot, and I'm sure people watching have probably heard me say this, is I believe that as DeFi matures, and I don't know if this is in 3 years, 5 years, 7 years, but that it would be natural and we should expect yields to decrease, specifically on stablecoin. So if the Fed sets the interest rate to near zero in the US here, or 1% or whatever it is, somewhere in that range, I would imagine that these tried and true platforms that are nearly risk free, like a Compound or an Aave, the yields there should compress to the market rate that we see set by different nation states, countries, mainly the US. What are your thoughts there? I mean, do you expect the yields to come down over time for, I guess, across the board for DeFi?
Yeah, so my thoughts on that is that I think the yields will likely come down as the market matures. But I also feel that the yields in DeFi will continue to be higher than outside of DeFi. And I think there are probably two reasons for that, right? First is that, when it comes to DeFi, we don't actually need compliance because, like when it comes to say legacy finance, there are a lot of costs involved, and all this cost can add up. So I think from the perspective of yield, in the absence of all these different costs, the yield in DeFi will likely be more attractive than the legacy finance because there's a lot less burden, right? If you think about it, Uniswap probably has less than 30 people working on it right now, but the amount of TVL that it has is pretty impressive, right? In the same way, I think Compound is also another good example. A lot of like billions of dollars in TVL, but managed by a very small group of people. Comparatively, if you look at the banks or the regulators, there are just too many headcounts. So
Right.
So yeah, this is one aspect, right? And I think the other aspect is the composability of assets and yields, because like for the same kind of asset, you can actually use the same asset and stack yields across multiple DeFi venues. So for these two reasons, I think I'm pretty optimistic that the yields in DeFi will continue to be higher than outside of DeFi. But yeah, I guess like they will continue. Within DeFi itself, the yield will be normalized.
Right.
Yeah, so like it will become less likely that we see 10,000% APY, but we probably have to settle with somewhere between like 5-20%. this sort of range.
Great. The last question I had prepared, I'm just curious, were there any unforeseen surprises or challenges about launching that you hadn't expected?
I wouldn't say that there have been surprises, but challenges, yes, a lot. So the biggest challenge that I can share with you is really the awareness of the product, considering that yield trading is still a very new concept. I don't think a
Yeah.
lot of people actually know the implications of yield trading because, like just a very simple example, right? What do you do when you see the implied yield higher than the actual yield? Um,
Right.
yeah, it's not that straightforward for most people because I mean, implied yield is a relatively new concept. Most people look at APY and then they decide on what they want to do, right? But when there's an implied yield, there's additional parameter for people to consider. So they have to learn a new term and then try to adapt to it. So I think in the near term, next few months at least, we'll have to invest quite extensively in our education, user education, and help people understand the different types of implications. So, but that on the same note, right? We're seeing pretty promising signs of the market picking up and adopting yield trading as a way for them to
Yeah.
hedge their rates. So, just some numbers. I checked our numbers so far. In the last month, we just on the Pendle AMM alone, right? We processed close to $5 million in trading volume. A third of it was actually the selling of YT, which effectively means that people are using Pendle to hedge their rates, and that's something that
Mm.
we want to see, right? So it started out reasonably. I think it started out like quite conservative, but over time, we started to reach out to more people and help people understand the concepts. We will I think we're starting to see the adoption, and then also at the same time, right? To help people onboard onto Pendle, we've also reached out to trading desks and lending desks because for some of these players in the DeFi space, Pendle's proposition is actually pretty straightforward. Because for some of this, like for example, lending desks, right? They aggregate funds from users and then they deploy the capital to DeFi venues. Now, if there's Pendle in the picture, they could use Pendle to book the rates, and then at least that allows them to have to kind of book the spread as well, right? Because the cost of funding is typically fixed, but the DeFi venue, the rates are usually variable. So having the optionality to lock in the rates for these lending desks is a proposition. I
Hmm.
think there is certainly an awareness there, and this is an aspect that we're also focusing quite aggressively on. Just reaching out to lending desks and trading desks and help them understand that Pendle could potentially be used for them to manage their yield. So I think with time we will likely see adoption from this sector. And then the other things that we're also working on in order to assure people is to get Pendle protocol listed on insurance platforms. We're speaking with a few of them, and the contracts are currently under review.
Oh,
So I
wow.
think once we're listed on insurance protocols, then it should give people more assurance. Because like let's say if you're a lending desk, right? If you're managing millions of dollars on behalf of other people, you want to have the optionality of buying a cover so that in the event that there is something bad, you can at least recuperate your capital. And then the other aspect is audits. So by now we have 5 audits.
Wow.
eh, 5 audits, one by lead authority, 4 others by white hats. We will continue to invest resources in this aspect because we think it's super important to keep the protocol safe and secure. So this is certainly one aspect that we will we will try to reach out to more white hats to help us with the reviews. And lastly, I think it's really a matter of time because people usually feel more assured about a protocol when the protocol has been around for a longer period of time. We've only been on mainnet for about a month right now, So I'm guessing like there's still a lot of capital sitting on the sideline, just looking and learning and observing at the same time.
Awesome. Well, thank you so much for joining me, Tien. I think your links should be below for Pendle and your Discord. If not, they'll be included for anyone watching not live. But if you're interested in Pendle, definitely check it out. And your Discord is an incredible resource if people have questions about how different things work or just want to say hi. So thank you so much, Tien. We really appreciate having you on, and we all can't wait to see the future of Pendle.